Ooh la la.
Good afternoon, everyone. Captain Lane speaking, and wishing you a safe travels to your crypto destination. For those of you traveling with mice, please securely position your cursor over the like button below and right-click with your favorite finger. For those with touchscreen devices, we ask that you gently press the
Greetings to the crypto community. We are pseudo-anonymous. We are here to smash that like button. We believe this content needs to reach more people like you. We are watching. We are listening. Most importantly, we are liking and subscribing. We are pseudo-anonymous. Expect us.
Hey, Kimmy, baby, I had a book over here in this drawer. You seen it?
You mean a little black book? Oh, honey, I cleaned out those drawers in that whole room and made a big donation to Goodwill. But don't worry, we can get you another one.
Oh, hell no. You're never going to believe what happened to me today at the Goodwill. I found a book of seed phrases, honey. I can get those hair transplants now. Oh.
Go best friend. That's my best friend. Go best friend. That's my best friend. That's my best friend. Go best friend. That's my best friend. Go best friend. That's my best friend. That's my best friend.
For those of you out there that have been hitting that like button, I just want to say thank you very much.
Alright, I think my microphone's on. Sounds a little bit weird in my ears, but I think we're doing okay. Welcome to stream, everybody. It looks like I am the only one here right now, and that happens sometimes. This may be a short stream here. Let me see if I can get the chat popped out here. Ryan K dropped in earlier and had a question. Now this wasn't what I was planning on going over tonight, but I had mentioned about doing it, so I would really rather take time maybe on the next stream to do this. Ryan asks, I'm going to miss school tonight, but I'll rewatch later. Can you please explain fib targets, example levels, what levels are targets for buying and selling? Now I try to go over that nightly in my streams on the things, but I know everybody, I may not put it out there and we pick it up. I will go more in depth into fibs on the next lesson, but for right now, let me point you over here to Bukowski, thepatternSite.com. A lot of what you see me do actually relies a lot on this, and turns out that Carolyn Broden, I mean, basically what she has got in this book all boils down to this pattern right here. And it was kind of an eye-opener. Now, she doesn't refer to it as this pattern, but that's the same technique that she's using there. And this one tells you, and it depends on you can use them as a projection depending on where they bounce. Like if one bounces off at 618, then you have certain targets that you can look for. I think that might be what you're asking there, and that's a little bit more advanced than what we've been talking about getting to it, and I have touched on it in some of the past videos. I have touched on it, but I was going to break it down a little bit more on the next one. We got MG Motorsports. How's it going? It says, good morning, ready for class today? Sorry, teacher, ate your apple while waiting. How's it going, MG? Glad to be here. So we got at least one person here. I was answering a question from Ryan. He's not going to be able to stay, but get him on the right track, and then I'll go into depth about that. I'm here on the Bitcoin chart, so just for giggles, I was wondering if we were going to make it past this area here earlier today. I mean, and we were way down here. A lot of people in this area were, I mean, there's just something, I mean, it's to be said in the market, and it kind of touches, well, does it touch on what we're going to talk about? On these red days and everything, it's easy to just feel like, oh, this is over. We lost areas and go down and go down and go down. But I was seeing some hopeful signs based on what I saw on fibs of this being a possible bottom area. And we got that little W in there. And so far, we're doing good. Actually came up a little bit more than I expected. And that's good. The higher that we get on these fib levels here, and this is 786, the more likely we are to hold this. Like, we're more likely to hold this area at 82.7 now. We might range. There's also that possibility we might range a little bit, and that's to be expected. That's what the bigger time frames were saying. But now we got a ribbon cross, so that's kind of cool. This is not what we came here to do tonight, but that's just kind of putting together some of the things that we have been over, the moving averages and some fib areas and things like that. And this is just the fib retracement, so let me point that out for anybody who's like, I don't know what the hell he's talking about. It's swing high to swing low. Oops, I messed that up. Let's start that all over again. Well, let's start that all over again. Okay, little fib tool over here. Go to our top point right here for this, basically this impulse move, this top area. I know there's one over here is a little higher, and we could technically play with it, but we want to really kind of, for this move, I want to concentrate on the local swing from this top to high. Swing high to swing low. And you might be able to use a magnet tool. I don't know. I like to do everything manually. It's just kind of soothing to my nerves. And that's a 786 retracement. Now we do have this little area over here, and I wouldn't doubt that we're going to go pick that little guy. That would be good, and we'll probably will not get higher than that. At least not in the short term. Maybe we can come back and then try to go back again, then open up the route to these higher highs and things like that. But this is just kind of how the fibs work here. And this little zone up here is a rejection area, just like this one is normally. But when we come back and bounce above it, that's a good sign. So I think things are looking kind of interesting right now. Now we're heading, we'll save this for tonight. Today is teaching day, and today what I was going to go over is more about our styles and what kind of styles that you are, because what you see me do here on YouTube, even if it's on a 1 minute chart, and we will get into time frames as well today, is I'm doing analysis, and it's part of trading, needs to be part of trading, a very important part of trading, to figure out your game plan and how you're going to play it. That's what we use for the technical now, is to kind of guide us and maybe project a little bit probabilities of where we think price might go. So is it worth us taking a gamble on that? Because that's basically what we're doing, is betting a probability that we're going to go up to a certain direction, at least in a certain direction, if not up to a certain level, usually based on past history of price action, support resistance areas and all that. That is tried and true, and it is the bread and butter of this game. But there's lots of other things that we can use to spice it up, and Fibonacci's are one of them. Another thing is understanding, and what I was getting at, we can analyze, get targets and setups and everything, but then, it's looking at what kind of setups are you looking for, and that depends on how you execute it, what your overall game plan, and that depends on what kind of trader that you are. And I thought tonight would be a good time to get in on that a little bit. So with the help of a little, I just went ahead and got with Grok on this. And I did get, they're posted? Are they posted out? I don't think I posted them, did I? Oh no. Well, I got some graphics too. Let me see if I can pull those up.
Hold tight now, baby, don't look away.
So I'm going to be posting this stuff over in the Telegram, and technically it's already over there. I'll put it in the student chart areas. The Bitcoin dominance cheat sheet. You see me do that. Is this going to do it? I got a trading checklist, just a basic checklist for pattern tradings and some ideas there. It's not anything written in stone, but it's just some things to kind of look for, to check off if you're trying to enter a trade. But this is the one I was going to talk about tonight, and talk about what kind of your style. And there's more than just this. This is the investor. There's a few other variations in between here, and what time frames work best. And you see me, I do like to go from top down, and sometimes I'll start on the daily and work my way down. When I'm going, usually that's my routine to do anything, regardless of whether I'm day trading or I want to know what's going on. So I just make that a habit, and I think that is a good habit. But there are certain time frames that most people kind of stick with or go with. And every one of us has a different style. We all have a different risk tolerance, and so we'll go over some of the most popular ones, starting with my least favorite. And maybe I have a little bit of bias toward it. I just don't like it, and I think it's a big time waster, or can be. But you see some people that do all right with it. Some better than others, but it's scalping. And so scalping, they're basically using a 5-minute and a 1-minute chart, something like that, and you can take it down as degen as you want to go technically. And sometimes, because Bitcoin moves so slow, I've even done 10-second. You'll see that on my little music streams or daytime streams I do where I don't show my face. And mostly using a trend line strategy and Fibonacci's and things like that. Well, it's the same stuff that I do, just applying on smaller time frames. Works great. A little bit different from some other people, but scalping involves making numerous trades throughout the day to capture small price movements. So to do that, especially on an asset like Bitcoin and in crypto, that's probably your safest one, because you get in altcoins, you got some other layers to contend with that could sway them a little different, and they all depend on what kind of day Bitcoin's having. But you're capitalizing on those small price movers, and traders aim to profit from tiny fluctuations, often holding the positions for just seconds to minutes, and you probably see some. It requires quick decision-making, focus, and a high tolerance for stress. I'll agree with that. Now, my only beef with some of the people that were calling themselves scalpers is, most scalpers don't take their time to, a lot of them that I've seen aren't trying to, some of them aren't figuring out the risk-reward ratio, or if they are, they're actually letting it play out. But if you're going to spend your time doing that and then not let it, I don't know, I just... Maybe I'm just not hip with the scalp game, that just selling on every little red candle. But that is a strategy. While the risk reward does not really seem worth it to me, and it can take up all day. From there, just a little bit bigger than, one step up from that, from the little scalper, just trying to just feed off the little bitties. The greats, the people that have made their money in the traditional market and otherwise, none of them made their fortunes scalping, and they actually said that this is not the way to do it. It's fine to do if you enjoy it, but this is not where you make your big money at. This is where you spend a lot of time, get a lot of taxable events going on there. They don't tell you about that, do they? It's very time consuming for as little as what you can get from it, in my personal opinion. Next up from that is day trading. It's just a little bit better. Now, day traders open and close positions within a single day, so they don't leave anything open overnight. You start doing that, you start getting into swing trade, which I like. So day traders kind of regimented, and they may only have a lot of them like to go between 9 to 12 in the morning when the US opens, or maybe when certain other markets open, like London, obviously Eastern Standard Time, it'd be, they open at 3 in the morning and they're open to noon. New York opens at 8 a.m. That may have changed now. Gosh darn it. Is it 9? I think it's 9 now. Or early market. Sydney comes open at 5 p.m. and the Tokyo comes open at 8 p.m. So Tokyo's just now starting, according to my little chart there. And some people time it there and they'll trade within, like maybe so many hours, 2 hours, 4 hours, and that's it. We'll just see what we can find during that time frame, and come back tomorrow and see what we got. And so that's taking more discipline, and I think that takes a little bit more discipline than scalper. Scalpers just kind of like, they just jump in whenever. Let's go scalp. It's easy to be a scalper and a degen, and that's where the fire and gasoline kind of happens, in my personal opinion. I think it's easy to go from degen to I want to be a scalper, and then lose it, or get caught up in it's a tricky thing to do, and then scalp didn't work out. Well, we'll turn it into a swing trade. And feed it until it's not where I think people should start, in my personal opinion. But day trading is a little bit better. But I mean, this is where you need more discipline to day trade. Especially if you're going to be trading between a little window, and 9 a.m. or 8 a.m. to 12 in the day, that's usually when the short squeezes happen, when the market's open. It's a great time to do it, and that's why you see a lot of YouTubers do their shows during there. And even in the legacy market, that's when a lot of the traders are out there doing, the day traders are out there doing their day trading during the morning, during the day here in the U.S. So they avoid overnight risk, and they capitalize on intraday price movements driven by news, technical patterns, or market momentum. And this style demands constant market monitoring and discipline. And the time frames that they usually use about the 1 hour, 15 minute, 5 minute charts. They're usually trading up to 5, maybe the 1 minute, but a lot of times just a little bit bigger, something that's going to last and give them insight over the next few hours there. I would even include the 4 hour, because why not? I like to have a little bit of extra information, and sometimes that guy can give you it. Now, from here we come to what I usually do, and a lot of people do, and probably most of you guys do, and that is swing trading. And this can be, all these can be, well, day trading, you're going to have to use leverage for scalping and day trading. This is going to be for your perpetual futures and things like this. This is more for people that should be more advanced before they try that. And what my mentors were telling me, and I totally agree, is that you shouldn't be trying to do any of this or anything leverage until you can be proven profitable swing trading spot. Until you are showing being consistently profitable with your spot swing trades, you need to leave all the leverage stuff alone, and probably even be the smarter one, and just don't go there. My mentors made their money, or my mentor made his money with spot and, of course, the trading group income, but he never did leverage, not perpetual futures or anything like that. At least not when I was in the group. That wasn't taught. Had to learn that on my own. Wasn't fun. Felt like I missed a lot of other stuff out there. But swing traders hold positions for several days to weeks, aiming to profit from short to momentum price swings or trends. And this is where the Fibonacci strategy is kind of cool, because that's what it's all about. It's identifying those swings in proportion to other swings that it made. It's perfect for swing trading. I just see it. It's cool. So this style balances technical analysis with patience, and it does take patience, appealing to those who can't monitor markets all day. It's perfect for anybody who's got a job, because you can plan out your trade and then trade the plan and set limit orders. You can do a set and forget strategy as long as you got, an entry price and got a good trade set up. You can do it that way, or you can monitor, you can set alerts. It's very flexible, and you can tailor it to your risk strategy or your personal risk strategy. Some people are cool with I'm cool with leaving a limit order. If I believe in a trade setup, I'll just set a limit order, forget it, and wait to see if it hits. Some people, no, I gotta wait for confirmation, or I gotta wait for my little signal, and you got that idea too. It all, you tailor it to yourself. So the best time frames: daily, 4 hour, the 1 hour. Those are kind of your friends for the swing traders, and I'll even say the weekly too, because these time frames help you identify broader price patterns and movement shifts. So swing trading, and I think that's where a lot of us fall into. And you can add leverage to it. I don't recommend doing swing trading so much with perpetual futures. The reason being, and you can, and I have, and still do sometimes, but the fees will get you. The longer you keep those trades open, the more that they're sucking out, and you don't see it. And now every exchange is kind of different that I've seen on how that works. Now, a lot of times you will see your liquidation price, it just gradually starts changing and creeping up. That's the fees coming in, and they're taking their money out. You just don't realize it, or maybe you read it, but you just got, it's nothing. It's only such a slight percent every so many hours. Over how many days are you keeping this trade open? That also goes with any kind of leverage, including spot margin. And so being in a position trader in a downward trend on spot margin, not the best position to be in, I'm just going to tell you, because of that reason. All right, so next we come to position trading, which is what I focused on mostly for this term, and swing trading. I'm starting to get more back into the swing trades. That's why I'm going to be focusing more on this, and narrowing down what I'm doing here, position trading. I think I just got a little out of hand on this. Position trading is a longer term approach where traders hold positions for weeks, months, or even years. And it is driven by fundamental analysis, economic trends, company performance, and big picture technical trends. It resembles investment, but there's more active management, because I'm actively, I'm setting orders or taking profits and doing this along the way, instead of just letting it sit in there and watching it or something. It's more active in the trading. So, and there's ways that you can do that in certain times of the market, and I've done it and know it's effective to do it. But when the market's with you, you can build a sizable bag from a small bag. And that's cool when that's going on. But if you don't have a good profit taking strategy, as I figured out, mine wasn't good enough. I think you got to actually go heavy on it, I believe. If you do that, you can come out good. Otherwise, but you don't want to ride the roller coaster or not take enough profit up there, so that when you go and draw down, it sucks. I'm just going to say it sucks in drawdown. When you got leverage on now, spot for any of these is the way to go. Seriously, that is the safest, best way to go. And had I stuck with spot, I would still have a lot more Bitcoin than I do right now, because I use my Bitcoin as collateral for altcoins. So that's one mistake that I will not do next time around. But we were doing position trading. All right, so trend trading, which I still think is good when the market's going with you, right? Trend trading is this is where traders aim to ride the price movements up or down for as long as the trend goes. It's kind of like your swings. You're trying to catch the swing, but you're going with the trend. This style can span short to long time frames depending on the trend's duration. It relies heavily on identifying the direction. So you're looking for the trend to actually change and just ride that puppy up. Usually, if you're doing the Elliott wave theory, or if you're waiting for confirmation on when the trend changes, you may have one or two more little bumps to ride up before there's a correction. And then we got momentum trading, and they focus on an asset with strong price movement. Now they're all about finding, they're scouting through, finding the setup, finding one that's getting ready to go in a direction. Trying to go in and just ride that little puppy, jumping in the ride wave and exiting whenever the momentum fades. So that's they're very similar. They're very similar. The time frames for these guys. Now, position trading, we use daily, weekly, monthly. We can look at the big things, right? For trend trading, week, daily, 4 hour, about the same as your swings. Now, momentum trading is often tied to breakouts or high volume events like earnings report and economic data releases. Whenever something, or the hype starts kicking in on something, and they'll get in and ride it. So each style suits different personalities, schedules, and risk tolerance, and scalping and day trading are fast-paced and hands-on, while swing trading and position trading allow for a slower, more strategic approach, and that is what WD Gann and a lot of the other masters out here, they recommend swing and position trading. And so you pick one that is based on how much time you can commit and how comfortable you are with the market volatilities, which kind of gets me where YouTube is just crazy about the 1 minute scalping kind of thing. That seems to be what's taken over. And I'm like, who realistically, other than, traders or, people that work at home or have some time, to devote to this. I mean, who really qualifies for that? Most people don't have the time to do that. The time to sit and study and learn it, and then the time to sit there and do it, the time it takes the experience to actually get it going for you, because you know, you go through the time when you're losing, and then you after a little while you finally quit losing, you level out, and then you finally start to gain a little bit, and then you're starting to get the hang of it, and then you got to focus on your risk management and everything. Speaking of risk management, here's some nice little things to keep in mind for risk management. Now, if you're scalping, you want to set some tight stop losses. And definitely with scalping and day trading, you want to get in the habit of using stop losses on every trade so that you only lose 1 to 2% of your account balance. So you got a $1,000 account, and we're talking about 1% of that. So we're talking about maybe $10, $20, right? So what that means, you set your stop loss so that when you get stopped out, you're only losing, $20 at the most on each trade. And then you use the little tool to figure out, well, how much leverage can I put on this? How big should my position be? And that's how you're technically supposed to do this, to get your position sizes for scalping and day trading, so that you only risk that 1 to 2%. And the most successful traders are very regimented with that, which I am not. But the best ones are, and they're very good about adhering to that. The other ones, they're just jumping in whenever, and oh, this looks good. Oh, it's got this ratio, but that's not. Some people do it from the hip, and I'm not saying I do that. I have a tendency. We as DGens have a tendency to do that. To be really good at it, we need to start working on being disciplined at it. And that takes a little bit more time, effort, writing things down, and a little bit more headache work. Oh man, not the fun stuff. Rather than let's hit that sell button, woo, or a buy button. So you need to limit your trade size. Risk no more than 0.5 to 1% of your account per trade, due to the high frequency of trades. Again, this all comes to risk management, so that if you lose, you're only losing a little bit, and if you win, well, you should win hopefully at least 3-4 times whatever it is that you're trying to risk there, right? So if your stop loss is going to stop you out at $20, you should be making somewhere maybe $60, $80, $100 on that trade if your targets get hit. That's the idea. And now the money that you can actually put in that trade, man, you can put up to $10,000 in there if you wanted to. That's not the important part. The important part is where it stops you out, that you don't lose anymore. And then hope and pray that stop loss hits, because there's sometimes that it don't, and that sucks. So stop trading after you're losing 2 to 3% of your account in a day. So if you notice that you're on, and I probably need to read this to myself a few times. If you're having a bad day and losing, especially if you're scalping, if you're having a bad day and lose 2 to 3% of your account, you just walk away. Walk away. That's what it says. Walk away. Maintain a high win rate. Aim for a risk to reward ratio of at least 1 to 1 or 2 to 1. Oh my God. As small gains rely on consistent wins. That is tiny. That's why it's not even worth it to do it. Avoid over leveraging. Keep leverage low. 5 to 1, 10 to 1, 5x or 10x, since rapid price movements can wipe out highly leveraged positions. We are getting sleepy already. All right, and then so for day trading, risk per trade, the same thing, 1 to 2% of your account. Set daily loss limit. They've got it 3 to 5% here, and walk away if you get hit. Just to, hey, this is it for today. Bad day. Let's try again tomorrow. See what's going on. But again, day traders are, that's where you need to be a little bit more regimented, in my personal opinion, to really make it work. You've got to kind of, watch your P's, make sure that you move your stop losses in the profit when you can, or to break even as soon as you can. You got to be on your toes and really do your risk management on that. Risk reward ratio, target 2 to 1, 3 to 1, to ensure winners outweigh losers over time. And avoid chasing. Don't enter late on moves. Stick to your plan to prevent impulse, high-risk trades. And that's one of the biggest things, because you see a trade and it'll pop up, and a lot of people start chasing the candles on there to get in, and then that kind of messes up your risk-reward ratio. So best to let the trade come to you, as hard as it is to do sometimes. Easier said than done, trying to control that inner Dagian when you're trading. Now, for the swing traders out there, let me say hello to everybody. MG Motorsports says, I think I'm a panic trader. I see a possible trade, then I panic and go as quick as I can without confirming it. Okay. A yacht in here. I said, I hate it, and it's something I want to calm down a lot. So that's an actual problem that you're, or a situation that you're having. Possible trade, then. So you're afraid you're going to miss out on it. I mean, that's normal. That's normal. That's normal. And I mean, the only thing I can say is the same thing that you're going to hear from other people too. I mean, there's got to be a trigger, something that triggers to get in. And it sounds like maybe you see a trigger and maybe you're second guessing, or maybe you're just, maybe you catch it late. Sometimes I do that. I'm like, oh man, that would have been a good trade if I'd been here like 2 minutes earlier. She's already kind of, and then maybe go ahead and getting in. So that would kind of fall into chasing, and the style that you're doing. Now, if you're swing trading, you got more flexibility, but if you're day trading, you got to be a little bit more on point with what your entries are. Swing trading is cool because we can narrow it down to the time frame, getting smaller time frames to kind of nail our entries, and that's what I suggest you do. And I don't know if that might help with your problem there. If you start seeing something, say if you're seeing something on the 1 hour, the 15-minute, you might be able to go down to a smaller time frame, like a 5-minute or something, and then find where you might come back for a little bit of a retest idea. And you might not see that on the bigger time frame because it's all within that candle. That's just some ideas from what I'm gathering from what you're saying there. Board PC guys, so position trading is kind of like HODL strat. I've got bags that I've had that I've built. I do moon bags. I consider that position trading because I'm trying to get on the bottoms, and that's a lot of what I do with position trading. And to build a bag and hopefully to moon bag it, pull my collateral out. That's what I'm trying to do. And then the smart idea I had to take those moon bags and put them on spot margin. Like I said, that's effective when the market's with me, but when we're coming in drawdown, it kind of sucks. But when you do it at the right time, you can build a bag just by managing it. You can do it on spot too, but it's a little bit easier with just, that 2 to 5x leverage that you get with spot margin trading, and you can kind of finesse it a little bit. But it's not just like straight HODL or take it and just leave it on exchange or put it in your wallet and forget about it. You actually got some management. So you're like with the fib levels, finding an area and taking 25% profit, and keeping it circulating. And that's how you kind of build your position as you go up. And then you can sell when you start getting to your fib levels or target areas. I will probably not do it with leverage next time, though. I will probably just stick to spot with it next time, though, because the drawdown on the spot margin if I didn't have thick skin, I would have freaked out a long time ago. So portfolio risk, limit total open position to 5 to 10% of your account to manage multiple holdings. I've got too many holdings, and it's supposed to be one of my ways of kind of deleting them down, and it's happening. They're getting smaller. They're working it out. But my gosh, fundamental checks are fundamentals, earnings. I don't pay attention to. I want good fundamentals for the coins I'm in and the projects I'm in. I got some of those to weed out. Using options or hedges. I don't use options, but I do hedge, and I've shown that strategy for a pyramid on top and pyramid on bottom, and that helps me kind of balance my account out when it gets kind of tricky and rough. I've found that to be better than just holding, because like you said, it's kind of like HODL. If you just HODL and don't do these kind of things, then you just, oh my god, you're whipsaw wherever it goes. But kind of doing these things kind of help you level out and help you kind of build a bag to keep it you got to keep it circulating, I found, and keeping it circulating keeps those fees paid too. So patience with stops. Set wide stops based on week, monthly support levels. So with trend trading, Avoid overcommitting early. Start with smaller position and add to winners as the trend confirms, reducing your initial risk. So it's starting out small, and it's kind of what I kind of blend that into my stuff too, that with building my bags, getting into trade. And then if it's going with a trend, it's trending higher highs and higher lows. You got it in a positive trend, hopefully in a bull market, and hopefully positive trend. Then you can add to your winners, by when it comes down, by the dips or the correction. Trend reversal plan: exit or reduce exposure if momentum indicators like RSI, MACD symbol a potential reversal. So when the RSI is up in near 100, near 90, flipping from there, passing 70, that's your sell signal for sure. Momentum trading, it's a lot of the same stuff. Only risk capital and trades with strong volume support and avoid false breakouts. And everybody wants to avoid a false breakout. Take profits quickly on your momentum trading. Try to go for a 3 or 5 to 1 risk to reward ratio, since momentum can fade fast. So some general risk management tips across all styles is you probably hear this a lot: never risk more than you can afford to lose. Keep your trading capital separate from living expenses. Don't get confused that with that idea, I'm going to live off this money. There we go. The trading balance can fluctuate a lot, and just takes a few mistakes for it to be affected one way or the other. Use leverage conservatively. Higher leverage amplifies both gains and losses. An emotional check: pause after your big wins or losses to reset your mindset, and that will help you avoid reckless trades. When you win big, what have you seen happen on YouTube? Ego comes in and then they do something stupid almost every time. When ego and emotions get in, you're going to do something stupid. And same thing when if you're and you start going on a losing streak and everything, and then you'll start having self-doubt and be afraid to getting in. You'll be afraid to get in at the right time. I noticed that last in summer when altcoins tanked, Bitcoin was down. I think it hit 50 something, 48. It might have went to 48. The market dropped and everything. I mean, everything just died, gave everything back, and it was just. I had positions. I lost my link position and my near position that I've been building back, but still haven't got it. Especially with this drop now, still haven't got it back to where I had it before. It was there, but then we came back down and it started going away again. It's weird how that works with position trading on leverage spot margin. So we forget what we were saying. We probably forgot what we were saying. But going through the loss, that messes with your mindset too, and then you're like, I remember being afraid to jump out there, like PTSD on that second time that we came back down. I was like, I was more concerned. I was a little bit more concerned about safeguarding myself, so if we went lower, I wouldn't face trouble. That was what was more in the forefront of my mind than, hey man, this is a good time. I need to start stocking up. This is the higher low this is the one we need to jump in on. And it was hard to do what I did. So backtest your rules. That's just good all the way. You want to make sure your strategy and backtest it, and also from your experience, make sure it's something that works out for you. I think this one is I think this one's really important. Analyze your trades weekly or monthly. Refine your risk approach based on your performance. And in essence, that's a performance review. And that's what I've had to do lately. I mean, you just got to sit down and say every so often, say, wait a minute. Is this really working, or am I spinning my wheels? Because we don't want to waste our time spinning our wheels. If what we're doing is not working for us, we don't need to be delusional about it and say, well, maybe it'll straighten out. We'll just keep doing. No, we got to find it, nip it in the bud. Let's find out what bad habits, because that's what it comes down to, bad habits. Or maybe something we need to learn. Maybe we're ignorant about something, but usually it's bad habits that we got to work on. And they're usually fed by emotions a lot of times. That's really what we're fighting with. The voices in our head and the bad habits that we're finding a hard time kicking. We get used to doing something a certain way, and it's hard to be patient and wait for that signal or that candle to confirm. Like, I want to buy now. You know, you have to sit there and wait another 5 minutes or another hour, depending on what candle you're trading or what time frame you're trading, to get your confirmation before it's, you know, technically safe to enter or more conservative to enter. But doing a performance review, I had to do one, and I had to look, and I had to come to terms with my spot margin strategy. I'm like, something of the skew here, and it was my strategy on not tapering profits enough, and I thought I had it. But I'm finding, nope, I should probably be looking at getting at least halfway out of my position at some of those bigger targets, 25%, 50, maybe even exiting those positions entirely, which that was not what I was thinking before. I was going to, you know, at least have some. What I'm finding now is that it would have been better, because you go back and see what we could have done in December. Need to do that. Well, I should have made this choice here. Why didn't I make it? Well, I kind of didn't pay attention to the MACD like I should have. Didn't pay attention to that little topping pattern. Thought we could walk it off. Little bad habits. Find them, identify them, so that we don't repeat them the next time, because we only got a few more next times coming. This is where we're at this game in the market. We only got so many more times, and, you know, maybe to say we have a year left would be stretching it. We got about 8 or 9 months. And I wonder, I'm looking at my, you know, my portfolio right now, and I'm like, compared to where it was just a few months ago, and I'm like, a few months ago, I was looking at it and I'm saying, yeah, I could see that. We just gotta do another 2-3x, man, and we're going. And now I'm looking at it saying, oh my God, how many X's have I got to get to do it? It makes it look a lot more daunting to get there now. And the only thing that I can do is next time that I get up to that level where I'm saying, oh good, it's only going to take about another 2 or 3, sell a bunch, and sit on it. And wait for that correction that always freaking comes. The one that scares the bejesus out of them, because we've seen that we get them, right? And the smart money is out there waiting for that. The big whales, they live for that. And they have the dry powder magically to do it, because they know to sell when all those green candles are there. And once we can flip our mindset not to chase the green candles, to be selling those big green candles, it starts making it is a mind shift. It makes a difference. And once you get on the other, you'll spend a lot of time, I found, on the wrong side of a trade, and your trades are in the red, and you're like, oh man, and you maybe you come out of it, the market straightens out, and you're like, oh yay, and then, you know, your account that went down, you know, it went maybe $400 in the negative, but then it went up 50, and you're like, oh man, yeah, I'm out. Whoo, I didn't know about you went through all that turmoil just to make $50, risking losing almost all your account. I mean, can we be honest? Anybody got some 111s? See, we got some 111s. Anybody's been through that? I've been through that. I'll come clean about it. 111. I've done that. That's been. And people do that with, you know, you get in drawdown or something like that, and then when you get just a little bit of profit, then you're getting out, you know, a lot of times too soon, depending. But we got to ask, why are we getting in drawdown anyway? What can we change so that does not happen? What bad habits do we have that's getting us to jump into a trade that is getting into drawdown? Is it because we're not setting a stop loss? Is it because it wasn't a good trade setup to begin with? Is it that we didn't see something that an indicator was telling us, hey man, this thing's getting ready to go against you? Were we buying at resistance? These are the things that we got to start asking ourselves when things go against us. And I don't see enough of that on YouTube from the teachers with trade setups, and I don't know, maybe it's just part of the presentation and everything, and it's hard to present things and remember everything. But, you know, a lot of times I see, you know, in a trade setup, a lot of times there's something, a cup and handle or something like this, and you know, or you got some crazy measure move or something, and you come back and then, you know, there's this, and it's like, okay, well, let's move on. Let's just, you know, and now we're going to be this. Yeah, and you know, I mean, without the real magic would be saying, what happened? Well, we had a trend line, there was resistance there, You know, whatever little things that you know that can help it make sense. Go back, and this is part of the back testing idea to discern this stuff. There was a 618 from our high to our low there, and even from our little local one. Although it didn't get it perfectly, it was at a 786 on that level. It was in a resistance area to begin with there, plus a trend line. And what else was it? We were above a 200. That was good, and then we lost it. Broke a trend line. I mean, the biggest thing I would say here is a flag at resistance would have been a no-no. But sometimes they could break out under certain circumstances. I mean, it's just to look. Why was that not? This was not a good trade. If you're looking at a flag here because of the resistance, now waiting for confirmation after cross that line, that could have been. But if you're zoomed in on small time frames and not really zooming out, that's why it's important to zoom in. That's why we use those bigger time frames. We know time frames with what kind of trader that you are. That's why it's important, so you can zoom out and get your idea and then zoom in and execute it, basically. But if this was the flag idea here, wait for confirmation above this. If you're looking at this, that would have been a little bit better. But here, we broke above it here, and it didn't confirm or anything. It just gave it right back up. It was a fake out. So that's something that's another thing with this buying at resistance, is to expect things like that. The best place, this is the IC to enter trades, or when you get these little lower low areas, especially when you get down these lower fibs, if you can pull them little guys out. All right, guys, we've already been going for about 46 minutes. Let me come over here and see what you guys are talking about here. I'm so late. You're fine. They got a rerun button, and it just went over basic trading styles and tried to answer a question for Ryan K earlier, which I will address a lot more in detail in the next stream. We'll get back into the fibs, and I just wanted something I prefer him to be here to ask questions about. MG Motorsport says, so I have done everything backwards and went straight to futures. Yeah, you're not the first one. I don't really understand spot. Really? That's usually where most people start. Could you show us how spot trading works? Spot screens on exchanges really confuse me. They should be about the same. I mean, spot, you're just buying it and you own it. Just like if you took it and you can move it off the exchanges, that's the best way. And some people, they keep their. I'm trying to get on an exchange here. They got a DEX. Yeah, no. They got a DEX Plus. I wonder what that's about. I wonder if you can get around and still trade that. There are ways to trade on Binance through some wallets sometimes when you couldn't really set up an account. There's some really cool ways out there to do some of that stuff. So this is mixed. I mean, most of them look the same on spot. I'm not really understanding what would be more confusing other than the strategy itself. With spot, it's just basically, you'd be buying at 112 and, selling at a higher target, and you'd be, we're on the 50-minute time frame. Spot swing trade's what most people do, or they buy on spot and just hold it. And so you'd $500, buy Solana at 112, and then when she gets up to back to 150 or something like that, then you would be selling and taking that profit, or selling a position of it. Now, what I prefer to do, or what I'd like to try to do, to try to build a bag, is the moon bag, and you really need to double price to do that. But you don't have to sell all your bag. Maybe you could just sell 3/4 and keep the rest. And that's kind of your you're building the bag as part of your profit taking, you feel me? But if you pull back as much as your collateral that you put, so if I put $500 in at $112 and want to sell it $150, pull my $500 out and keep the extra Solana. That's one idea that you can build up and throw it in the bag. That's one way to build up positions. And rather than building your account in dollar value, you're building it up in coin value and coin bags. A way to do Bitcoin that way too. On any asset, really. I don't know if that's answering your question or not, but that did throw me off. Most people that I know started out on the spot, but wow, went straight to futures, huh? That was a learning curve then. Just imagine 1x futures. Doesn't sound as appealing, does it? But the beauty about it is that you got your spot, you own it, and you don't have any fees going against it. You don't have any. You're not going to get liquidated with it. There's actually a lot more you can do with it. It is valuable. You can use it as collateral. I recommend that you don't, unless you really done your homework on that situation. But that's holding the spot. That's where you're going to make some good money though, for real. And trying to build up the bags, and that's just one way to build up the bags, how you take your profit. Just some ideas to throw out there. I don't know if I answered your question or not. I feel like I kind of flubbed on it. Or maybe it's an idea for another school show. Maybe. MG Motor says, I use BitMart and I find it confusing on spot. Sometimes. Now on BitUnix, I ran into, and maybe it's better now, but where I couldn't buy the amount that I wanted, like I had to buy a certain amount, and that would throw my game off. I'll have to take a look at that. I've been using BitUnix mostly for future. I mean, I do have spot over there, which it's actually held up a little bit better than I thought it would. Yeah, straight to futures. That's why I still have to go to work this afternoon. Well, hopefully the futures is treating you right. But it's still the same things. I mean, whether you're using spot or the futures, if you're using leverage, it amplifies everything. It amplifies your emotions, amplifies your gains, your losses, possibly, and it amplifies any mistakes that you make. It's not as forgiving. So you got that going with futures where you don't have it with spot. Spot is a little bit more forgiving there. If your coin, whatever, let's say you got, Solana, let's just go back for Solana. You bought it at 150 and it drops 140, and you got 10 of them or something. You're not down that much. But if you got, 10x leverage on that, you're down quite a bit. And then, on the futures, you don't actually have that coin if you're trying to actually hold something for long term. So you think a Solana will hit $500 and you're really sold on it. And that's how you want to grow your account, your big account, take 50,000 to 300,000 through. The best way to do that is through your long-term holds. And that's proven. You just got to get through this part of the market though. Because this is the part of the market where you're saying that's bullshit. We're in the disbelief phase of the market. If you look at the Wall Street cheat sheet, which I've got somewhere. Oh, I do. I can't. Can I? Where are we? I can't even see it. It appears that you guys can, but I cannot. Disbelief. It's the very last one. Well, if you look, is it here? Okay, right. Yeah, here. Here's disbelief right here. Well, this is where we are. I believe we are in this disbelief state, and then we start working for the hope phase, and then optimism, and then belief, and we're right at the point where everybody's about to give up, and then that's when things are going to change. And we're late. This market is late. It was too early. Now it's too late. The tariff things and all this stuff is throwing a kink in everything, putting it off a little bit, but that could just be a pressure on the cooker for a nice big squeeze on Bitcoin. It really could. And I know we're not on here to do. Oh man, did I just lose? I just closed my chart out, didn't I? Well, that's not good. I know we're not here to do the big TA, but I'm still really impressed with what Elliot thinks over here. And that fits right in with what we should be doing, for real, for real. Even though we can't come down to lower areas, we're not out of the woods yet. We could still be coming down, but what's coming next is the 5 wave. And some people see this a totally different way too. And even Elliot will change his mind sometimes. We're on an ABC correction right now, but is a bigger time frame. Oh man, are you doing? Oh, look at you, Elliot. This is why we don't invite you out to dinner, Elliot, because you're saying we're going down to 35,000. That sounds like crypto. That sounds like Crypto Savvy. I like Crypto Savvy. He's a great analyst, but he still is bearish. He still is bearish. It's like, I think there's a little glint in his eyes when he starts talking about $35,000, which I'm sorry, that makes no sense for us right now. With everything that we got going for crypto, finally, with the government, we got the government on our side. Doesn't make any sense. But on the weekly, he thinks we can get up to 250,000. Wow. This is some hopium. The weekly actually looks good to me, but it's just not time for us to blast off just yet. But in a few weeks, don't know how many, I think we got it coming. All right, guys, I'm going to go ahead and close out this stream. Thanks for hanging out. I hope it was educational or at least interesting. MJ Motorsport says, I do have my HODL, of course, and that is going great. Well, mostly great, but I need to get away from the futures and actually trade more on spot. Spot trading is good, and like I said, if it does make a difference. It's usually a safer way to go to practice and get better at your spot trades. It takes longer, or you got to put up with smaller gains, but the spot swing trades, you can make just as much there as you can in your futures. I mean, we got leverage built into our system here with the altcoins and stuff a lot of times when they're going in our favor. But the futures is appealing. It is appealing, but it's kind of a rigged game, just to be honest with you, though. There's a lot of hidden fees and a lot of things that go on there that will just, it makes it hard to build those accounts. It does. All right, guys, thanks for hanging out. I will see you tonight's stream. Make sure I get this stuff off my screen here. And next time on the next one next week, we'll go more in depth with the fibs and fib extensions and all that good stuff. And Ryan had his question earlier tonight, and let's just go back over it to explain fib targets and examples, targets for buying and selling. So I'll try to talk a little bit more of that during my nightly streams, but we'll also do it on next chart school. Thanks for hanging out, guys. I'll see you tonight at 10:30ish. Let's go to the end screen. Make sure I'm not missing. I was on top chat. All right, guys. See you tonight. Thanks for hanging out. Where's the little doggy that waves?